So welcome everybody. Today, as you know, you're all here to hear Tony Baddour, who is the Vice President of the St George Business Chamber, but he is also obviously in the finance sector, and he's our expert today talking about what happens after September 28 when JobKeeper 2.0 ticks in. And I think I put in one of the emails I sent out, it would have been great if they didn't call it JobKeeper, because it's such a different kettle of fish, as we're going to hear from there. So Tony, without further ado, I'll hand it over to you, and you've got control of the screen, as you know, to be able to move through your pages there.
Fantastic. Thanks a lot, Trevor. Thank you everyone for coming. First, I might start by saying that what discussion we have today is general in nature. And I do seriously encourage everyone to obviously talk to their tax advisors, accountants, obviously about their own sort of business situation. So today is more a general conversation aimed at obviously just giving an overview of what the new JobKeeper requirements are going to be once they kick in a couple of weeks' time. I want to start by also just quickly, I know there's some new faces here, just quickly, a quick intro, if we can, Trevor, with everybody, just give them a chance. Obviously, we're speaking to George, but obviously a couple more people have joined us. If we could just have a quick whip around, say, just introduce yourself quickly and say what you do, and then we'll get cracking with the workshop.
Good. So I'm going to run down my screen. So we'll start with, well, George, let's start with you again. George K.
Yep. Just the introduction, is it? Or
yeah, just businesses. Yep.
Yeah. So my name is George Karyanopoulos. I run a mobile mechanical business based in Arncliffe. And I've just joined the St George Business Chamber, and I'm looking forward to this workshop and many more to come.
Fantastic. Thank you. And Greg Bondi, you're next on my screen.
Yeah, thank you, Trevor. I run a management consulting business, currently working from home, and we provide consultancy services on corporate governance and a whole range of things. Thank you very much for having us up, and looking forward to the presentation, Tony.
Thank you.
Mandy, you're next down the list on my screen. Hello, welcome.
Hi, thank you. I'm also an Eventbrite seeker, and saw this advertised, thought it would be good. My husband and I run an engineering firm, a structural engineering firm in Melbourne.
Lovely. Oh, you've come from Melbourne. Well, welcome. Very much so. Umesh, we were talking to you earlier, but please tell us, everyone again who might not have heard about your business.
Oh, sorry, we're a structural engineering firm. Calculations and engineering for buildings and business development. So, we've been running that for some years now in Melbourne.
Excellent. Umesh.
Yep. So I have owned medical centers for the last 25 odd years, and I currently have one in Roselands. And I've had childcare business in the past, and I have some properties which are leased for restaurants. So I found this on Eventbrite, and I thought I'll figure out in detail what's going on with 2.0. That's why I joined.
Excellent. Thank you. George Raphael has sent me a note in the text box. George runs Fernwood Fitness, a Fernwood Fitness gym, and he doesn't have a microphone to be able to talk to us to tell us that. So welcome, George.
Welcome, George.
And Donna Taylor.
Hi, I'm Donna Taylor. I live on the mid-north coast of New South Wales and run a bookkeeping and business consulting business. I've got some clients all over the place, and I was just interested to see the latest updates from you guys on JobKeeper 2.0.
Lovely. Welcome aboard. Thanks for coming in from up there. It's as sunny there as it is here in Sydney too. Luke, tell us about yourself, mate.
I just do graphic design and marketing services for small, medium-sized businesses. And just want to keep abreast of the situation and see what's going on with all this stuff. Should be good.
I like the way Luke said he just does all that stuff. Luke is our guru, folks, for the business chamber. Anything that looks great in the chamber promotions or social media, Luke's your man. So,
well, just don't blame me for anything, but all the good stuff I'm happy to take credit for.
And Ashur, you've just joined us. Would you like to unmute your mic and tell us a little bit briefly about your business? No, Assure's dropped out. Actually, he was there and gone again. So, Carlos, are you able to talk while you're driving?
No.
No, it doesn't look like he can. So Carlos is driving. Carlos is the secretary of the Business Chamber and also the owner of King Carlos Coffee. And if you look at Luke's camera, you can see Luke is working out of that office this morning as well. Tack, are you there?
Yes. Technically here. Good morning to everyone. I'm the treasurer for the Business Chamber. I'm an accountant providing tax and accounting services, and I've been doing that for a long time, too long actually. All right, okay, that's it from me. Back to you, Trevor.
Tanya, I'm working down my list. I'm not doing it alphabetically, so it's 2 T's in a row.
Okay, good morning everyone. My name's Tanya Katsanis. I'm the City Marketing and Strategic Partnerships Officer at Georges River Council, and the Chamber and the Council are working very hard to get a lovely program up for small business. So hopefully you'll enjoy today's webinar and you'll love it that much that you'll come back in October and do the 4 that we've got proposed.
Very good. I don't think I've missed anybody out of all that, but if I did, now's your chance to quickly jump in. But if not, Tony, we'll hand it over to you. And
fantastic. Thanks, guys. Thanks, guys. Thanks for the intros and welcome. As I said, today's more a workshop about general information. Obviously, we've heard in the media it's been saturated with the whole JobKeeper 2.0 that's coming into effect at the end of this month, to be specific, from the 27th of September onwards. I'm sure most of you have heard the first version of the JobKeeper, and you may, and I don't want to ask if you've obviously applied or not. It's something that's obviously for your own businesses, but the JobKeeper that's coming on board now, there's probably 3 key areas that that the business has looked at. If you want, the government's looked at sort of tightening, if you want to call it that, or maybe even being a bit more targeted in its approach as opposed to the first version. And in particular, the biggest obviously ticket item in that is the reduced rate, which will touch. I mean, hello. Okay. So can someone just unmute? Yep. Somebody mute their mic.
I'll just bear with me a second. I'll mute everyone. Tony, what I'm going to do is mute everybody, and then you. No, I can't from me. Yamesh, it's you. Could you mute your microphone, please?
Oh, how do I do that?
Hang on a sec. I think I can do it. Done. There we go.
Fantastic. Thanks, guys. So yeah, as I was saying, the payment rate will be reduced. There's also the introduction of the lower rate, what I call the second tier, targeting more casuals or people who work less than 20 hours a week, which I think is probably one of the bigger improvements on the first version. And thirdly, as I said, tackling those people who fell through the gaps in the first version that may have worked a couple of hours and not qualified for whatever reason, subject to their work environment, work requirements, I should say. Okay, so the first, as you know, the first JobKeeper came into effect 6 months ago, and it's coming to an end. So what the government said now is, obviously the situation hasn't improved, but we're going to extend it a further 6 months till March next year, 21. But the difference in that is it's not just a pure, simple extension for another 6 months. It's actually been divided into two parcels of 3 months. At the beginning of each 3-month period, you're going to have to reapply for JobKeeper and obviously establish that you've suffered a decline in your revenue based on the criteria that the government set. So if we look at it in the first 3-month period, that first 3-month period starts from the 28th of September and goes all the way to the 3rd of January. The second 3-month period then goes from the 3rd of January to March 21. And the way you will determine your establish your criteria hasn't really changed. The percentages subject to your turnover haven't changed. So, for example, if you're earning more than $1 billion, which we all wish we were, you'd have to establish a 50% reduction. That hasn't changed. If your revenue levels are lower than $1 billion, which obviously captures the majority of the small businesses, then obviously you've got to establish the 30% rule. Now, if you're a non-profit, a charity or a non-profit organisation, the 50% reduction rule still applies. So there's been no change in respect to the eligibility criteria. However, what they want us to do now is show that there's been a reduction from your June quarter to September quarter, first and foremost, but then also show a comparative between the September quarter 20 versus your September quarter 19. You've got to show a genuine reduction of it, obviously 30% for most of us sitting on this call, or 50% for anybody above the $1 billion turnover. So you've got to establish that every 3 months now going forward, whether it be and the most important bit too, guys, here is if you don't qualify in the first quarter, for whatever reason, you might have had a good quarter of revenue, you might have had some great stuff. It doesn't mean you can't come back in January and apply again if you feel that the December quarter was a dip, or you can establish that there's been a reduction. So that's very important. So whereas in the first one, you had to establish eligibility from day one, but not worry about, obviously, actual revenue for the next 6 months. Here, what we're saying is, the government's saying is, no, you've got to establish the reduction, but then also every month within that 3-month period, and this is very important, you have to declare your actual income now. It's no longer based on forecasts. It's based on actual income. So if you're reporting quarterly, then obviously you'd wait till the end of the quarter and obviously declare, or you would base it on your actual figures for that month. And most of us would know what that figure is just purely on bank statements alone. The government's happy to let you do that, so you don't have to lodge. So I know some people lodge monthly and some people lodge quarterly. Irrespective, you still need to use your actual figures, not forecasts anymore. So that's very important. Also, as I touched on, was the two-tiered system that they've brought into play. A couple of things in respect to that are, in the first version of JobKeeper, we had the $15,000 flat, obviously quarterly fee, fortnightly gross figure that was payable to all eligible employees. Well, that's now changed. Now they've brought in a second tier to capture, obviously there's a lot of media sort of outcry, as well as obviously businesses complaining that a lot of their staff who obviously were with them as casuals fell through the cracks and weren't eligible. What they're saying now is, okay, well, we've got two lines now. You've got obviously full-time staff, and what they're classifying that as people who work greater than 20 hours a week are entitled to the full rate of JobKeeper. That's very important. Then you've got the next tier, which is those workers who work less than 20 hours. They're entitled to the second tier rate, which is, I think off the top of my head, is $750. It's actually $750. So I'll get into more detail as we get through the document, but just so we're clear, there are two different tiers. And yes, if you're a casual working less than 20 hours, then yes, you may be eligible. But again, as an employee, you've also got to satisfy certain criteria there, which we'll get to shortly. I'm going to take a couple of minutes out just to ask everybody if there's got any questions that they want some clarification on, but just that quick overview there of some of the changes before we move forward.
Tony, can I just ask to make sure I'm clear with it? So you could technically be a casual employee, but if you're working more than 20 hours a week, you'll still get the full JobKeeper. Is it?
That's correct. So if you're earning, that's right. That's where there's a little bit of a grey area there, but it is specific. It says if you're working more than 20 hours a week, and I've got a little at the end of this. I'll show you. There's a little summary tab I've put together to show people. But yes, effectively, the way they define it is if you're working more than 20 hours a week, you're entitled to that $1,200 figure, and obviously if it's less than 20 hours, you're entitled to $750. That rate, just so we're clear, and I touched on it later on in the presentation, in the second 3 months, that figure will drop, but we'll touch on that shortly. That's the next section of the slide. So let's talk about the JobKeeper rate, which obviously is the most important part here. Once we've satisfied the eligibility criteria, there's obviously, we're now officially entitled to the JobKeeper. You start receiving JobKeeper. The big difference between version 1 and version 2, or 2.0, whatever you want to refer to, is the amounts have changed. And you can see from on my screen at the moment, from the 28th of September to the 3rd of January, which is the first 3 month period that the next JobKeeper tranche will come through, the figure is 1,200. So obviously there's been a drop of $300 per quarter, down from $1,500 to $1,200 for all eligible employees who are working in the business. And if you look at the most important sentence there, for 20 hours or more a week on average. So in the 4 week period of pay before either the March 20 or July period. What does that mean? That's what you'll see now. And obviously the ATO, when they bring out these policies, they like to bring in new terminology. There's a terminology they brought in place, which you're going to hear a lot. It's called the reference period. And the reference period is exactly what they're referring to there. For an employee to be eligible for JobKeeper, they must have been at least with the company for 4 weeks or 4 pay periods before either the 1st of March or the 1st of July, leading up to the 1st of July. So what that basically means is, if you remember when the first version came out, a lot of people said, oh, I started with the company in February, damn, I missed out, shucks. What they're saying now is, no, if you were there between the 1st of, in this second version, if you were employed with the company between the 1st of February to the 28th or 29th of February, then you do qualify now in this second version. Whereas in the first version, you didn't qualify because you had to be with at least 12 months with the company. Whereas now they're saying, look, if you were there before March and 4 periods leading up, then you will qualify now. But also, if you were there between the 1st of June and the 30th of June, leading up to the 1st of July, then yes, you also qualify. You don't have to be there. You don't have to have been there for 12 months or so on. You will qualify. But again, there's certain eligibility criteria which we'll touch on later on. Now, what they've also changed is the $750 per night for eligible employees and business participants. These are people who worked less than 20 hours. So you're right, part-time casuals, you name it, that fall into that bracket where their hours change on week on week. In the first version, they were left out. Some people were left out. In this version, the government's tried its best to capture those people in the net by saying, hey, on average per week, if you work up to 20 hours, then yes, you are eligible if you satisfy all the other criteria. So that's very important. So that's the second group of people who are employees that are entitled to JobKeeper under the new regime. Is that kind of clear, guys? If please feel free to ask if you want further clarification. But I think you'll see in the table summary at the end of this presentation, it'll be a little bit more clearer. Okay, now the second 3 month period. This is another change that version 2 has brought into play. So from the 4th of January till the 28th of March, the JobKeeper rate drops a further amount. The rules don't change, but the amount changes. So we're going now from $1,200 gross a fortnight to $1,000 a fortnight gross before tax. Same criteria, same eligibility, doesn't change, just the amount changes, guys. And similarly with the second group, they drop from $750 down to $650 per fortnight gross. So that's a big change. Obviously, that's probably the biggest change that we've seen in JobKeeper. And unfortunately, for a lot of business, that's going to be a big change in their cash flow. And it's something I've been telling a lot of my clients is to prepare for. Is obviously with the Christmas period and obviously we see a lot of reduced trade there, but also from a cash flow, guys, you need to realize that the next 6 months isn't about 1,200 or 1,500 anymore. It's about reducing the rate over a period. It's almost like we're being waned off the JobKeeper for the next 6 months until the government either makes further announcements to either extend it or stop it. We don't know at this stage, but effectively that's what they're doing. They're reducing the rate and preparing businesses for the inevitable, and that is that JobKeeper eventually will stop. We know that it's not going to go on forever. So just take note of that, guys. That it does change, and you'll probably have to potentially adjust your work rosters, your working levels, your headcounts potentially. Again, it all comes back to the nature of your own business and how things have impacted, obviously, at that time. I hope that's sort of clear so far, guys. Is there any questions going forward before I move on? No? Okay, great. All right, so again, we move on to probably the most confusing bit for a lot of people is the additional turnover tests. As I mentioned before when we started the presentation, the criteria for qualifying hasn't changed. It's just the process has changed. And obviously the comparative periods have changed. So again, we touched on starting from the 28th of February, whether you're a business or a non-profit organization, you have to meet a further decline in turnover tests for each of the 2 periods. So not only do you have to start in September and establish that you are eligible, you also then have to start again in January and establish your criteria. But as I touched on before, don't panic if you don't qualify in the first 3 months. And I hope you don't suffer a decline in that 3-month period. I hope you increase your revenue. You still can come back in January and test your eligibility there as well. So it's not like with the first one, you had to qualify initially to be part of the program, and before those relative deadlines that came in, those really confusing deadlines that came in May and April. This one is split up into 2 3-month periods. So don't talk to your accountants, talk to your tax advisors about your eligibility and how most people would know how their business is tracking anyway, and that they kind of got a feel. But you do, under the new regime 2.0, have to base it all on actuals. It's not forecasts, it's actuals. That's also very important to make clear. We're no longer forecasting revenue, we're basing it on actual. And even when we declare our revenues, we're basing them on actuals. There's no longer that requirement to base it on forecast. It's actually based on actual. Okay? And again, the same thing applies in regards to the reduction test. Again, if your revenue is greater than $1 billion, guys, then you've got to establish a 50% reduction. That hasn't changed. If your revenue is less than $1 billion, you've got to show a 30% reduction on actual revenue. And if obviously you're a charity or a non-profit organization, a 15% reduction. So I'll give you an example. If you're looking to declare for this first 3-month period, you'd be looking at your September quarter for 20 versus your September quarter for 2019 as your comparative. And you've got to show a reduction between the September 20 quarter and the September 19 quarter of 30% based on actual revenue. I hope I kind of made that as clear, not confusing, but you're comparing 2 comparative quarters. Similarly, when we go into January's declaration period, you'd be looking at your December quarter 20 versus your December quarter 19. Again, based on actual revenue. So like the test hasn't changed, guys. It's just that you've got to do it. You've got to do it every 3 months now, really, is really what they're saying. You can't just say, it's not as easy as it was in the first version where you can qualify once and that's it. So now it's more about justifying every 3 months.
And I've got a question for you.
Yeah, sure, George. Fantastic.
Yeah. So if your business is a on growth business, right? So last year you were, had 2 staff and you're growing the business, all's going well, you're going hard. Then comes March where COVID hit, and then you've got a decline, right? Now, obviously, business starts picking up again, and you go. Now, is there a case-by-case sort of application, or is it just purely numbers? That's it.
No. Okay. No, good question. Very good question. Step 1 is obviously to establish the simple way is obviously, as I just touched on, is to establish that 30% reduction based on actual BAS versus BAS quarters. As before, but no, the ATO, and please talk to your tax advisor on this too, because as on your point, if even if you fail the test on whatever grounds, obviously everyone's business is different to the next person's, it doesn't necessarily mean the door's closed. The ATO will apply case-by-case tests. Obviously, you've got to put through a case and talk to them, but no, it doesn't necessarily mean, oh, look, even if, for example, say it could be a 32 or 33% reduction, right? A little bit out there. Don't be disheartened. Pick up the phone or get your tax advisor to pick up the phone and say, hey guys, look, this is what's happened. We're sitting on the crust, but we can see some dark clouds coming through. Talk to the ATO, get some clarity around it, get some advice on whether you still can go. They may or not approve you. Again, it's subject to your own circumstances. But no, George, it doesn't necessarily mean you don't qualify. You do pick up the phone, talk to them, see what they say, and they'll advise you. The ATO, and I've given you can see on that screen, there's a blue link. You can look at it's called the alternative test link. There's different scenarios because not everybody fits into that 30% or that, that cushy, quarter versus quarter comparative. Everyone's business is different. So no, don't be disheartened if you're looking at going, oh, I'm a little bit out. Pick up the phone, talk to your tax advisor or to the ATO and see what they say.
Cool. Thank you, Tony.
Fantastic. No problem at all. Any other questions, guys, before we move forward? And as you can see there, guys, just a little bit there, you can see that the rules haven't changed. To be eligible, again, just to reiterate, 50% reduction is expected for an aggregated turnover of $1 billion, a 30% reduction with an aggregated turnover of less than $1 billion, and obviously 50% for Australian charities and non-for-profit commission registry charities. Now, guys, just I will make the point, in brackets you'll see excluding schools and universities. I had a question the other day from what if I provide a training school? Is that deemed a school or is it deemed an education facility? Am I allowed to apply? And that was a good question. What I said to them, and I'll say to anybody who might be running, is get in touch with the ATO as to the definition where you sit in regards to, depending on your RTOs and your qualifications, registrations, whether you may or may not be deemed eligible to receive JobKeeper. Most times out of 10 you will be, but just check your criteria and where you sit in regards to, that space. And most times out of 10, if it's a privately run school or organisation, you should be fine. But please check anyway. Last paragraph in that section was the registered religious institutions responsible for religious practitioners will continue to be eligible, which I thought was great. Eligible to receive JobKeeper payments, provided they meet existing eligibility criteria requirements. Again, same thing. They're entitled to it, but also they need to satisfy, like all of us, certain criteria. And again, I don't think we've got anybody here in the group, which I won't touch on, but effectively you've got to make sure that you still apply, you're still eligible under the criteria. Nothing else should change. You're still subject to the same payments and you're still subject to the same eligibility criteria. All right, so that's the business side. We've established now that we're qualified. We're going to get JobKeeper. The hard bit now, and I find the most confusing bit I find with it for employers is which one of my employees are actually satisfying the eligibility criteria. It's always a grey area. The first version was a disaster in the sense that a lot of people, it actually almost in some instances created a divide that some people were getting JobKeeper in the organisation, others weren't. And it was actually quite interesting seeing all that. But unfortunately, no system is perfect, and we know that. And as much as the government can try to help out as much as we can, you've got to give them credit. They're trying their best to sort of cast the net as wide as they can. And I tried to do that in this version. Not a lot, but they've just, I think the biggest rule would be the fact that they've captured the under 20 hours per week category, which a lot of people fell out of. Now, to be eligible as an employee, now this is a lot of it hasn't changed, but we'll go through it point by point. Obviously, you must be currently employed by an eligible employer, including if you were stood down or rehired. So what does that mean? So effectively, if you were employed in that 6-month period and for whatever reason the business suffered a decline in business and they had to stand you down or let you go, if they rehire you, and this I think is a great incentive, then you will qualify for JobKeeper, irrespective of the rules, because you're deemed to have been with the company already. It's just that you've been stepped down. So, for those people, if you guys get a phone call from your employees, former employees that are saying, hey, I'd like to, any chance that you can help me out, put me back on the books, and so on, please entertain it if you feel you can. If not, it's not a bad thing. You're not obliged to. I need to make that clear. But there is something I'm going to clarify in regard, and maybe I might just step back a little bit. With what a lot of people have fallen into a trap in, and actually I want to touch on this, with the payment of the JobKeeper, there seems to be a lot of confusion out there, and I've done a lot of research into this in preparation for this meeting, also with a lot of questions that I get. With JobKeeper, the biggest thing, the thing that irks me a little bit about it is it's paid in arrears. And this is something a lot of businesses have been caught out with. And what that basically means is employers have to pay that $1,200 or that $650 amount first in order to get it back from the government. Now, if you haven't been paying that, then you're not eligible to receive it. That's very important, guys, especially for those working in the real estate industry, where a lot of people are working on commission only and so on. There's been a lot of confusion there. Employees thinking that it's a straight entitlement of $1,500 or $1,200. That's not the case, guys. If your employer hasn't paid you that $1,200, if the businesses haven't paid that $1,200 to their employer, then technically they're not entitled to apply for the JobKeeper. And what I found was interesting when I spoke to the ATO the other day, the response they gave me, which I thought was quite interesting, and I think we've heard it in the media before, take out a short loan or take out a loan to cover the payments. And obviously when the JobKeeper comes through, you can just repay the loan back. That's effectively the answer they gave me over the phone. So that's very important, guys. You've got to outlay the $1,200 before you receive it. Am I clear on that, guys? That's very important, and that's where a lot of businesses have been sort of struggling a little bit. Is obviously with cash flow. How do you fork out? The whole purpose of JobKeeper, it's almost contradictory. The whole purpose of JobKeeper is to help people's cash flow. But what the government sort of hasn't been really clear on, and in the media, is that you do the guidelines as per the ATOs and the Fair Work Ombudsman as well will tell you you've got to pay it first. So you've got to find somewhere in your cash flow to be able to pay it with the anticipation that you're going to get it back. So that's important, guys. Just thought I'd make that clear before we go forward, that you've got to outlay it to get it back. Now, going back to the employees, how do we know which one of our employees is eligible? Well, obviously, as I said, they've got to be working with us. But at the same time, if we've stood them down, we can rehire them and they'll still fall into the eligibility criteria. Where for the eligible employer, a full-time or part-time fixed time, or I should say an employee was eligible in the extension period of up to 1st of July. They've also, what that basically means is if they were employed before the 1st of July, then they are also, again, eligible if they are around in that four pay period cycle that they're talking about. So irrespective if they're full-time, part-time, or on a fixed contract, if they were there involved in the organisation before the 1st of July in that 4-week period, then they are eligible for JobKeeper. A long-term casual employee, again, as at the 1st of July, and not a permanent employee is also eligible, but must have been part of the organisation on a regular and systematic basis for at least 12 months. So effectively, if you've got a project worker who's been with you for about 12 months on and off in that period, working on projects, fixed projects, or whatever it may be, even if they fall within that sort of 0 to 20 hours or in between 20 to 40 hours, they will still be eligible. But they've got to be seen. They can't have just done one project within that 12-month period or disappeared and then come back. It doesn't work that way. They've got to be there helping you on a regular basis. Although it might be intermittent, it's still, there's got to be consistency basically within that 12-month period. They can't just rock up because I did a project for you, 11 months ago, and suddenly they want to come back and get JobKeeper. That's a grey area. You're stretching a friendship with the ATO there. So just be careful. Now, next point is obviously that 18 years of age and older. They need to be 18 years of age to qualify for JobKeeper. If you are 16 or 17, you can also qualify if you're an independent or not undertaking full-time study. Again, traineeships, junior staff that might have you've taken on board, who may be in that 16 to 17 year bracket, they do apply as long as they're independent and they're not studying. So they can't be studiers, and obviously if they've moved out of home or they're supporting themselves, then they will qualify. They've just got to obviously advise you of their circumstances. Okay, if you're either an Australian resident for tax purposes or social security purposes, again, and the definition there is obviously you have to have spent at least 6 months in Australia working to qualify for that definition of an employee under the Tax Act. Again, all this is general, guys. Check with your employer, check with your tax accountant and advisor, and make sure you sit down with him and just go through your payroll list, and make sure they'll satisfy this criteria. And if they do, then happy days. Now, also, the next point is we're not in receipt of any of these payments of during JobKeeper. So, for example, if you're receiving parental paid leave or paternal leave, then if you were receiving, then you don't qualify. But if you weren't receiving, then you qualify. Even if you've taken time off to do some work, you will, and you've come back to the workforce, you will qualify. And also, you weren't receiving a workers' compensation payout for whatever reason. If you were on compensation workers' comp, hello? Yep. Sorry, did somebody ask a question? Sorry, I thought somebody asked a question. If you're workers' comp and you've got an employee who's coming back, you need to sit down and assess their situation, guys, and make sure they qualify. They don't immediately come back on JobKeeper. If suddenly somebody had a bad back and now all of a sudden they've got a good back and they can come back to work as JobKeepers there, they don't qualify. It's not a lay down misere where they come in and all of a sudden they've got there's certain criteria, and I don't want to get into it because there's certain criteria that they've got to satisfy. You've got to make sure that they're clear before they actually qualify for the JobKeeper payment. Okay, now more importantly too, this hasn't changed from the first version. Only one employee can claim JobKeeper payment in respect for an employee. So again, guys, just check with your staff. Make sure they're not getting JobKeeper from somebody else. Obviously, the ATO will know this when they declare, because through the single touch payroll, they'll be able to see where employees are sitting. So ask the question, but you don't have to. You don't need to. You've simply got to ask the question. If they say no, well, then you can only take it on face value that that's correct. Don't stress over it. Single touch payroll will give the ATO the answers, and they won't get any payment for it. Or what will happen is they'll get it from one employer, not the other. But the ATO will tell you that anyway. So don't stress in that point. Now, if you're self-employed, the self-employed will be eligible to receive JobKeeper payment where they meet the relevant turnover test, guys. Again, if you're on your own, you're a single operator, single sole trader operator, yes, you are entitled to JobKeeper as long as you satisfy the turnover rules. Same rules apply to everybody. There's no, the turnover test, it's uniform. So it doesn't matter what you do, doesn't matter what business you are, doesn't matter how the size of your business, if you fall within the relevant revenue brackets, that criteria will apply. So self-employed, sole traders are all good to go as long as they satisfy. Now, employees will continue to receive the JobKeeper payment through their employer during the period of the extension if they or their employer are eligible. As soon as they leave you guys, obviously they'll have to take, but you no longer get JobKeeper payment once they leave you, and obviously you will have to tell the ATO that, and they can pick up their JobKeeper from, well, I don't think they'll be able to get JobKeeper if they go to another job, because they would be able to satisfy that criteria. But once they leave you guys, you must notify the ATO, obviously through your single touch payroll portal, and they'll drop off. I'm gonna just raise it, and I know we don't like to hear the word administration and liquidation, but I had a question the other day from somebody who said to me, oh, if my company went into liquidation, what would happen to the staff in regards to JobKeeper? And the answer to that question, guys, funny enough, is it continues. Once a company qualifies, it actually continues for JobKeeper. So I know it's an uncomfortable conversation as business owners, but JobKeeper does continue under administration. If a company falls under administration for whatever, it just means that it's being administered by, obviously, the administrator. And so that continues. I know it's a weird one, but I did get that question the other day. So look, it's one of those things, guys. With the JobKeeper 2.2, you've just got to make sure now you can't just rest on your laurels and say, well, I qualified the first time and that's it. I don't have to do anything else. You do have, it's a little bit more onerous on us as business owners to ensure that we satisfy the criteria, to ensure that we talk with our business advisors, talk with our tax agents and ask them, hey, am I still okay? It's a simple question. It shouldn't take too long to answer. Just make sure, guys, because the ATO and the government will be watching this second version quite closely. The first one was almost like a pilot model. You know, as long as we've all done the right thing, it should be fine. This time around, they're putting the onus as us on business owners to stay on top of our game and make sure that we remain legible, because they will come back and ask the question later on. So just be conscious of that, guys. Just make sure you're in constant communication with your accountant, your bookkeeper, your tax advisor, whoever it may be, just to stay on top of things and just don't let it slip, because that's very important. All right, this is the table, guys. We're nearly finished. This is the table I put together, the summary table with the JobKeeper rates in the different groups. And guys, this will be available on our website at the end of this workshop. So feel free to download it and have a look at it and read it in your own time. And if there's any questions, feel free to obviously send them through to the chamber. We'll tackle them the best we can. So let's have a look at these JobKeeper rates. And it's simple. So what I've tried to do here is try to make it as simple and a bit more clearer, so we can see how we all sit when it comes to the employee and determining where our employees sit. So phase one rate, obviously we know, is obviously the first version of JobKeeper. Flat fee for everybody, $1,500. It doesn't matter where you worked. 1 hour, 20 hours, 40 hours, you're eligible for that flat rate of $1,500 per fortnight before tax. JobKeeper 2.0, it's a different kettle of fish, as you can see there, guys. Phase 2 rate, which is between the 28th of September to the 3rd of January. If you work more than 20 hours a week on average, then you're entitled to $1,200 gross a fortnight. If you work less than 20 hours a week on average, I should say, then it is it reduces to $750 a fortnight gross. We're all clear on that, guys. That doesn't need any, it's pretty clear. Now, phase 3 of the JobKeeper in 3 months' time, as you can see, guys, quite a drop there. We're going from $1,200 to $1,000 a fortnight gross if you're working over 20 hours a week on average. And obviously, if you're working less than 12 hours, you go down to $650. And that's between the period 4th of January to the 28th of March. Again, you've got to re-establish your eligibility criteria. That's the most important thing before we even get to phase 3. So if we just focus on phase 2 for now, if we qualify, it's $1,200 fortnight gross for over 20 hours and $750 for less than 20 hours. Is there any questions, guys, that anybody wants to ask about or need any clarification?
Tony, Yamesh has posted a question in the chat box. I'll read it out for you if you like.
Yeah,
So
please.
previously the employee was paid $1,500 even if employed for just 5 hours, for example.
That's correct.
Now as the amount is less, specifically if you're working less than 20 hours, are you required to pay them the same amount as the ATO pays you?
Yes. Now, yes, good question. Fantastic question. So yes, guys, if you elect to join the JobKeeper program, obviously you become eligible. Yes, guys, that 1,200 figure or 750 figure, depending on where you sit, is a baseline figure. So what does that mean? So if your employee qualifies as an eligible employee, if you pay them, let's say $1,000 a fortnight, they fall into that 20-hour group, and you pay them regularly $1,000, then yes, you need to top them up that $200 extra that the ATO forwards to. So you would, if you pay them $1,000 and the ATO sends you $1,200, then you would pay them the extra $200. But where the confusing bit is it goes back to what I always say to everyone, this is where the government's kind of let themselves down a little bit. You still have to, what they don't talk about is you have to pay the $1,200 to get the $1,200 back, guys. Now, if they elect to work only that equivalent to $1,000 and the government still pays you that $1,200, you're eligible, and the government says, yes, we'll give you the $1,200, then you still got to top up that $200. So that baseline is $1,200, guys. So irrespective if you pay them anything under $1,200, you're going to have to top it up. Anything above $1,200, guys, you don't have to do anything. Similarly with the $750. If you're paying them more than $750, then when the ATO reimburses you, then that's it. If you agreed with your employee that they'll be getting the $750, then that's all they'll get. But you've got to sit down, guys, and that's something I didn't touch on. You've got to sit down and talk to your employers. Once you've established that they're eligible and you've notified the ATO, you've got to give them the letters. I'm not sure if people knew about this in the first version, but there's some letters and some criteria that you have to step through with your employees, notifying them. Just giving them a simple letter, which there's a couple of templates online that you can get, advising that they've been they're eligible for JobKeeper, and specifically saying how much they'll get in that letter and how many hours they'll work to be able to be eligible for that JobKeeper. So again, talk to your accountants, guys. There's certain criteria you need to follow, but yes, guys, the 1,200 and the 750 is a baseline minimum that the employee will get. I can see another question coming through, I think. Is there another one there or no? The chat's flashing at me. You're on mute, Trevor.
Sorry, click on the chat box so you can read it, or I can read it out for you, Tony.
Oh, sorry. Okay, there you go. I will do that. I'll have a look now. George, 25% down on turnover. Do we still qualify? Is there an alternative test? Yes, good question, George. Yes, even if you fall within short, still pick up the phone, talk to your accountant, talk to the ATO. There are definitely alternative tests that you can qualify for or apply for or seek advice or personal or get private ruling from the ATO. So yeah, don't be disheartened, guys. If you sit within that 25 to 30% bracket, don't just say, oh well. Pick up the phone and talk to them. You'll be surprised. If I'm paying my employer job, can he also do other private work outside of his job for working with me? Here's a good question, Greg. I'll read it again, guys. If I am paying my employee JobKeeper, can he also do other private work outside of his job working for me? Yes, he can, but they can't do job. They can. And when you say private work is quite a broad definition. I'm not going to. Obviously, if it's cash work, I'll leave that alone. That's not for me to discuss. I didn't even hear that question. But guys, the reality is they can do as many jobs as they want, right? And that's their own. But they can only get JobKeeper from one person, one employer. That's really what it comes down to. You can have 15 jobs, but you're only going to get JobKeeper from one employer only. So yeah, they can do whatever they need. Now, I will say this, guys, too. In version 1 of JobKeeper, there was a lot of friction between employees and employers, especially when they were asked to vary their hours of work. I don't know if anybody's experienced that. A classic example is where an employer would say to an employee, look, I can't afford, obviously business is bad at the moment or slow, whatever it may be. I can afford to give you the $750 on reduced hours. That's okay, guys. An employer can do that. But you've got to sit down with the employee, give them at least 3 days notification of the change is happening. But you're entitled to say to them, hey guys, there's going to be some varied hours, but let's sit down and talk about that $1,200 payment. You know, what will that equate to? What works well for both parties? You can do that, guys. It's not a JobKeeper is not for an employee to be paid and stay at home. I need to make that quite clear, guys. If they're getting JobKeeper, if they've been stood down and that's been agreed by both parties, that's fine. They can stay at home if both parties agreed to that, which is a very rare situation in my experience. But if they qualify for JobKeeper and they're eligible for JobKeeper, then you are entitled to ask them to come to work within obviously an mutually agreed working variation to working environmental conditions. So I've heard a lot of that in my time where people say, "Oh, Tony, one staff member is saying, oh, I don't want to come in because I'm scared of COVID, but you can pay me JobKeeper." That's not how it works, guys. That's not how it works. If you're entitled to JobKeeper, then you can work from home. You can say to them, "Great." If you're not comfortable in the work environment, then they're well within the right to be asked to be set up at home and do some work. There's a lot of information on the Fair Work Ombudsman's website. It's quite fair, guys. It's it's a give and take relationship. JobKeeper is not for you to sit at home and watch TV and Netflix. It's there for you to work with your employer, and obviously in a safe but varied work environment. I think I've got one more question to go. Is comparison of turnover is 2 methods, same quarter last year or immediately preceding quarter? Okay, good question. To keep it simple, guys, right now you'd be sitting with your accountant. He'd be looking at your September 20 quarter, which is going to end at the end of this month, and he would be comparing it to your September 19 quarter. It's not forward, it's backwards. So we're not forecasting, guys, anymore. We're on actuals. So we've got to base our turnover test is based on actual figures, not forecast. That's the ATO and the government's quite clear on that. So yeah, you've got to not look forward, you've got to look back and compare the 2 periods based on actuals. I think that's the last of the questions, guys.
I just asked a quick one, Tony.
Yeah, of course, George. Go for it.
When do we actually apply for this JobKeeper 2.0?
From the 28th of September. I think most businesses would have declared on the 14th of September for the previous months. Yep. I would now be sitting with my tax accountant, advisor, so on, bookkeeper, and saying, "Hey guys, where are we sitting now? How are we looking? Is it looking like we're going to be eligible? What's the situation?" I highly stress and recommend that you do that and start that process with your accountant now. If you've declared for last month, then I will be now looking at the next one. Just so you know and can plan.
Okay.
Cool. Plan in case you don't qualify. Plan if you fall short to talk to the ATO. And obviously, if you do, you've got to now talk about which employees are eligible and notify them and going through the whole rigmarole again.
Okay. Cool.
Tony, can I just chime in quickly? And I need to temper this with the same disclaimer you said at the start. This is not professional advice. This is just something that you should be considering. Yep. Tony was talking about having discussions with your employees around cutting their hours and all that sort of stuff. They made temporary changes to the Fair Work Act to give employers a lot more flexibility, and it shortened the discussion time substantially. To the best of my knowledge, they haven't extended the time period for that, and that all ends at the end of September. All of those temporary schedules in different awards, and it's not across the board, it's award by award. and there are some things that are nuanced for particular industries. The real estate award, for example, as Tony mentioned, is a bit special because a lot of it's commission-only sales and so on. But again, just keep in the back of your mind, if you're having discussions with your employees, that at the moment, those temporary clauses are all ending at the end of September, and I haven't seen anything from the Fair Work Ombudsman to say that they're extending it or that there's a new version of that as well, which means that it would revert to what the Fair Work Act said and what the awards say about the amount of time you have to give your employees to discuss and to consider those sort of changes to their work.
Fantastic. No, that's a very good point. Thank you for that, Trevor, for chiming on that. But that's very important, guys. And it feeds into your question, George. You've got to start planning now because things aren't set in stone, and everyone's different, subject to industry and awards. I agree with you, Trevor, 100%. So please, I encourage you to start talking after this workshop or in the next couple of days. Talk to your advisors and make sure all bases are covered.
Excellent. Tony, thank you very much on behalf of everybody. In fact, I'm going to do that one in my screen because I can. So look, guys, as Tony said, we will make this, the information that he's got here on the screen available. We'll put it up. I'll have to rely on my friend Luke to manage that for us, but if Tony sends it through, we'll put it up on the website, the Chamber's website for people to access. This recorded workshop will be available on YouTube as soon as I can get it all set up and put there, and I will email everybody who's attended today, and there's a couple of people who registered and weren't able to attend. We understand that. I'll make sure I send that out as well from there. So, and Tony is presenting again in October as part of our Small Business Month workshop series that Tanya alluded to or referred to rather, when she introduced herself. A lot of those are in conjunction with Georges River Council. The theme of Small Business Month for the Chamber is going to be around resilience, and Tony's focus will be there on things like, you tell him, Tony, it's the things like cash flow.
No, go for it. No, you're doing a great job. Go for it. Basically, the workshop will be around cash flow management, how we can get through. Obviously, it's a very challenging time at the moment, guys, and a lot of business' biggest challenge is obviously cash flow. So we'll be talking about options, what's out there, whether it be COVID relief, whether it be, what new laws or data collection laws, all that kind of stuff. So hopefully, I'll be able to get to a plethora of information that we can sort of discuss and have an open forum about it. But yeah, it'll be interesting. Hopefully the theme will be all about resilience, and hopefully by that time we'll be talking a lot more positive about the environment that we're operating in, and we'll be able to sort of get out of this all together as one.
Excellent.
Well, thank you very much, guys.
We're going to wrap up there. A big thank you to Tony for his work that he's put into this for today. We really do appreciate it, Tony. Thank you for that.
My pleasure. My pleasure, guys. And
keep an eye out. Those of you who are chamber members or are part of the Buy Local initiative, you'll receive emails. Normally you get one a month from us. You're going to be getting them a bit more frequently in the next few weeks, of course, because Small Business Month in October is going to be a very, very busy time. And thanks to those who visit us from out of town, could I say that as well, who have found us on Eventbrite. We appreciate you coming along. I hope that you found some value in it, and I'll make sure you get that follow-up email as well from there. So